Now, here's the good news. And even with this big dip, which I think we saw here, and then we saw another one, right? There is basically analysis showing the Bitcoin volatility is at record lows. So Bitcoin's range-bound trading is raising eyebrows among both traders and analysts despite the Bybit hack. Data from Cointelegraph Markets Pro and TradingView showed a quiet weekend for Bitcoin USD after snap volatility over the record hack of crypto exchange Bybit. Despite the dust still settling on the event, Bitcoin managed to pause erratic price movements as traders' attention focused elsewhere. Range is still ranging, popular trader Dan Crypto Trades summarized in one of his weekend posts on X. Meanwhile, volatility is trended down as price is getting more and more compressed. Even during yesterday's drama, price still closed at the same price region, which it has done so for the past 2 weeks. Now, obviously, this is kind of blown out of the water though, right? Because we just had a huge decrease in the price of Bitcoin, right? So maybe 1 month is a little bit better of a look, right? So we're all the way down to that 84K range. So maybe this analysis was a little too soon. But Dan Crypto Trades and other noted that the decline in open interest across exchanges dipping to its lowest level since February 9th per data from monitoring resource CoinGlass. Quote, generally a lower open interest with a higher price is something that makes for a good reset, even if it's just on a lower time frame. Still needs spot to take it from here, he concluded. Buzz around strategy, meanwhile, came as a result of CEO Michael Saylor's posting a chart of the firm's existing Bitcoin holdings, a move which has recently become a classic signal that further buying has or will be taking place. Quote, I don't think this reflects what I got done last week, end quote, Saylor commented on the latest chart print. Now, obviously, he made that print on this downturn, which was down to 93,000. That buy happened and it continued to go down. So, on topic of volatility though, on-chain analytics firm Glassnode revealed that Bitcoin's implied volatility has rarely been lower. Implied volatility reflects the standard deviation of market returns from its mean. Bitcoin's 1 week realized volatility has collapsed to 23.42%, nearing historical lows it reported on February 21st. In the past 4 years, it has dipped lower only a few times, October 2024 and November of 2023. Similar compressions in the past led to major market moves. Glassnode further noted multi-year lows in play for Bitcoin options implied volatility, an event that was previously followed by major volatility spikes. So what are we seeing now? Major volatility spikes. So this could be on point and seems to be, at least to me, signaling that we are going to, like, because we had this compressed volatility over the past month. Let me be clear what my thought process is. We've had the compressed volatility over the past month. We just had a huge move downward. And so if we just had that, then I would expect higher levels of volatility coming in the next few months, right? Towards the upside ultimately is what I would expect from previous halving cycles, which means that the dip down into the 80 range is actually a positive thing, not a negative thing, because we're getting out of this sideways movement regardless, right? So that's kind of where I'm at as far as that's concerned. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.